What's going on, guys, and welcome on in. We have not done a live in a minute, so we are back at least for this week. So we're doing a live diving into some of the top stocks we were watching for next week. Starting off, we're going to start off with a market update like we usually do. I do say for sure, like we've been talking about this, we talked about in past weeks and months, right? The melt up in a sense of how the market just kind of keeps drifting higher. And it seems like that is the case the past couple of weeks as well. We've been kind of drifting higher after the pullback here in October. We kind of been drifting higher and higher and higher. And we've had like, 1 or 2 days where it's been red, but for the most part, generally it's been green, green, green. So the danger with that, at least for the overall market, would be kind of I'd expect at least at some point we get a pullback. Does that mean that we're going to get one? No, we traditionally do see, I want to say, a strong finish to the year, like the last week or two. The Christmas rally, or whatever you want to call it, Santa's rally, generally is like that week in between Christmas and New Year's is generally historically one of the greener weeks, or at least it's green historically. So we'll see if that happens again. But this time of year, we start to see a lot of low float stocks, a lot of small caps picking up. So the question is going to be, right, those have been getting hit really hard. And so take a look at IWM. Different story, right? SPY kind of wrapped at those all-time highs. IWM hit those all-time highs here at the beginning of the month and has been pulling back. Now, it's at a really good spot. I personally would be thinking this could be a spot to pick up potentially some calls into next year. Give yourself some time if we can hold this level of support. With maybe cutting this off if we see IWM dropping below 230 and holding below. Well, that means that maybe it's going to fall back below, maybe come down towards this trend line down to the 220s, and that could be a better spot for a bounce idea. If we can't hold up in this range up in the low 230s. So that said, does that really mean everything and anything for a lot of small caps? Not necessarily. If you're holding a lot of small caps and you're swinging a lot of small caps, yeah, that's going to kind of flow with the market. But if you're playing catalyst plays, if you're playing momentum plays, it doesn't really matter, right? It's not going to matter as much as you think unless we have like massive just destruction of the market, right? So which I don't really expect unless we get some crazy news, right? We can have pullbacks, but crazy, 5% down day. I don't really see that happening unless there's some outside news that drives that. So we'll see. Hope everyone's doing good. Yeah, it's been a while. I know it's been too long. Let's see. Let's dive in. I want to dive into a bunch of stocks in this week's video. I want to at least come back to some of those vaccine stocks. Let's take a look at Mrna. It's been a stock that I haven't really been watching in a while because we did pull back. We fell below a lot of these gap downs, and we're like, okay, now it's like, what's it doing? It's been curling up. So with a lot of these vaccine stocks, a lot of with their news in terms of some of the boosters and whatnot, we've been pushing back up. So we filled this gap, which is actually a nice little target. So we talked about how this thing pulled back a couple weeks ago, or about a week or so ago. We talked about the unstoppable stock, right? We've been talking about that stock for a while, which happened to be Mrna, and made some updated videos for that. And then it came back down this range. We're like, hey, this could be a spot. If it doesn't dip down to the twos, it could bounce around here and start to curl up, and some price target levels to be some of these gap fills. So we filled one of those. Now let's look for a bigger move up. This thing could be looking up into the 300s again. So we'll see. But it's been curling. It's been pretty strong. With that said, PFE is also another one to watch. These are kind of longer term plays in a sense. Pfizer just hit its all-time high and then pulled back. It's done that quite a bit. When it hits those all-time highs, it tends to pull back. And we kind of see that same thing happening again. So this, has been on a nice trend after it had that really kind of significant downtrend really from the end of August through October. It's been kind of trending up pretty strong again. Not exactly the same way. It had some bigger ups and bigger downs along this frame, but the volume's been there. So look at the volume. I mean, really, it has been there. They just gave out their dividend, 39 cents per share on PFE. And so the volume on Friday was a little more than usual, but again, it was a red day. It pulled back at those all-time highs and pulled back about $2. So it's something to at least monitor and at least pay attention to and watch going forward. So these have also been, I've noticed, if we take a look at this Pfizer, go to like some airlines, go to like American Airlines. It's just interesting how these have been kind of almost inversely correlated, I want to say, to a degree, at least lately. So airlines are right back into a spot I like again. I've been telling you guys, this is my biggest investment, I want to say, for 2022. I think the airlines will have a great year. In 2022, pricing and the future growth of the sector, travel, airlines, I think will do quite well. Everything was really inflated. So we saw how, this is the weekly chart, by the way, for American Airlines. I don't have a position with American Airlines, but it's a good kind of, way to model the sector. A lot of things kind of rebounded super strong, right, into the early part of this year. And that was kind of a scene across the board, whether it's penny stocks, whether it's kind of growth stocks, even airlines, even recovery stocks. They kind of rebounded too fast, too quick in a sense. And so now I think we're kind of seeing the downstream effects of that, where it's going to be kind of a period of time where it's going to take its time to work out. And that's what at least I'm expecting on American Airlines. Although, really good support on American Air, just under 19 bucks. And you see that across the board with a lot of these airline stocks. If you go to Delta, DAL, the ticker, really good support here on Delta, just under 38. If you go to, like, let's say a JetBlue, which is one that I have, you have some really good support here at 14. So they're showing some really good support. And if you generally like to play the more technical plays, large caps are probably where you want to be. To be honest, it's just been what it's, at least as of late, that's been what it's like. And I'm seeing a lot of people making the transition from small caps over to large caps. And I think I'll, to some degree, do more of that in the future, maybe with options, maybe with just larger share size to play off some of these moves, because you do see them hold up, technically speaking, a lot better. Breakouts, breakdowns, supports, trend lines, that stuff generally likes to hold up a lot better than penny stocks, because with penny stocks, you're talking about stocks that can be moved on a tweet. You know, if somebody can tweet something that can move the stock up or down, hey, I took profits, or hey, this is going to be the next 10x play, you know, that's the type of thing that could completely disregard technicals, you know, within a tweet, right? So you have to be, you know, at least aware of that. And that's why at least my focus for a lot of penny stocks and those types of plays now have been kind of finding the better balance sheets, finding the better positioned companies, the lower float plays and stuff that has potential for some nice news in the coming weeks, you know, some nice catalysts and stuff like that, and playing them that way rather than having to worry about these things are not respecting my technical levels anymore because someone's tweeting or because the market's getting hit and whatnot. It is what it is. All right, let's see. When I can, yeah, I don't know. I've been messing around with the time frames of that because sometimes, because I'm thinking like football and stuff, people on the weekends, right? Football, like a lot of the 4 o'clock games or whatever end, and then like the night game comes on in like an hour or so. I don't know, but if it's better earlier, later, morning. I mean, honestly, I'd probably prefer mornings, but I feel like most people don't prefer mornings on a Sunday for live streams, but we'll see. I can do another poll at some point. I don't know if I'll have one next week. I'm going to be traveling, so I'll have like, you know, my laptop, but that's really it. But going forward, I definitely want to make sure we do these every Sunday at a minimum. I wish you a good evening as well. Let's take a look at Wish. This is one that people are talking about, and it could, of course, keep going lower. Let's look at the daily chart on this thing. It could, of course, keep going lower. It got just kind of crushed again. They had earnings. It didn't really die on earnings. It had a little pop into earnings. Earnings came out, it popped, and then it went red. It went under 5. I thought of this as a potential pre-earnings short play because of everyone maybe looking to sell into that. Didn't really work out too well, but it doesn't look good. But again, what we're noticing, what I've noticed is that a lot of the retail crowded stocks that have gotten a lot of attention on Twitter, on YouTube, social media, right, that people have been kind of jumping behind, that were inflated for a good bit, they've all been getting crushed. They got crushed this last week, okay? So the question is on some of these, I think the biggest question and the money will be made on finding these types of plays that have gotten kind of crushed. Like, look at this. There is a rebound back to where Wish was trading of 25%, you know, back to where it was trading like a week and a half ago, right? Which is pretty big. If you were to play options on that, you can do really well. Or just shares, that's a pretty big move in a short period of time. So maybe not Wish. I'm not too sure. I haven't dove in, you know, too deep into the fundamentals behind Wish and the potential there and how everything's going. But I believe they have a new CEO and whatnot. So the question I think will be finding these plays, but finding the ones that are undervalued. So maybe Wish falls into that category as it's now fallen below 450. It's made its new 52-week lows. It's made its all-time lows. Maybe Wish is one of those that falls in that category. I don't know. But there are probably plenty more other stocks where that came from, and finding the ones that have kind of completely lost touch with fundamental value, and then they've just been kind of following the market, right? Following just the sell-off in the small cap market, right? Finding that kind of disconnect is where I think a lot of money will be made, and that's at least the idea that I have going forward. We'll see how it plays out. Generally speaking as well, we have to watch for this week being one of the craziest week for low floats. Why? Is because generally speaking, I don't know if it's necessarily because people are home, they take off during this time of year for Thanksgiving break and whatnot, but I wouldn't be surprised if we see more traders in the market this week, people either working from home, people who are off this week and whatnot. Market's open, not on Thursday, but the market's open. So this is traditionally a pretty wild week in terms of some stocks. And so you see some volume, and I'm looking really and we'll talk about it if it happens. I'm looking for kind of that switch, that algo switch, where we start to see stocks that have low floats. We start to see some of these runners actually hold up. GTEC is one, for example, that had a really good day on Friday. This is, again, look what happened here. Final flush, the thing was holding up in the upper fives. It flushed down to the lower fives, and then the next day had that catalyst. It had a news catalyst, went crazy. So we're kind of seeing that that's been happening, right? These stocks have been flushing out, hitting new lows, which this exactly did, and then boom. So it's the question of finding those plays with catalysts, with news potential, that are solid, that are more fundamentally solid, because now people are going to be more comfortable running this thing up and buying this thing if there's high amount of cash on their balance sheet, if there's a low threat for an offering. Now, a lot of them probably will offer. A lot of these companies kind of same thing, rinse and repeat. They kind of tick down. Boom, they get their news. They have some awesome stuff. Cool, sounds good. Drop an offering, raise capital, raise funds, and then the stock falls back off again, right? So this is one, and then LGVN is another one as well. Look at this. It held up for 2 days. Same thing. Again, right, this thing was holding up in the mid to lower threes. It flushed down into the upper twos, and then boom, from the upper twos, now not saying that, everybody could have seen this coming, but from the upper twos, this thing hit up over 400% in 2 days, hit 1475. I mean, these are the types of, this is nice to see this. Now, this stock, LGVN, roughly, I'm looking on Webull, a 2.27 million float. GTEC was roughly a 4.4 million float. So you're noticing that two very low float stocks had some pretty big moves at the end of last week. That's a good sign going into this week. So we'll see if that happens again. And I think that we are going to see some of that action. So I wouldn't be surprised come tomorrow morning if things start to really pick up. We get a fresh news release, classic runner like that would be a really good sign for the market heating up. And I think we're getting back to much more of a game that was being played pre-pandemic. What we saw across the board in small caps. Now, you go through cycles and phases and times, but for the most part, what you would see is that things would just kind of generally have a weight to the downside. Things would be heavy. They'd always be heavy, and they'd always be kind of flowing down. So kind of what we saw the past couple of months. Take a look at this. Past couple of months on GTEC, right? We've been seeing this thing from July, kind of just slowly floating down. Now, it was down 22% roughly since July to November. It's not that much. We just saw Wish drop 25% in 5 days. So this is kind of the nature of what we notice generally across the board in small caps, at least pre-pandemic. Things just didn't go up, right? Things were kind of doing something like this. And then you get those pops, and then they fall back. So for those who like to play the small caps and who will continue playing them, you need to understand a couple of things. I think that is very key. I have some rules for myself, but I would always kind of recommend a couple of things. If you're in stuff for catalysts, for things like this, always sell the spikes. I always recommend always sell the spikes. If the stock is up more than 20%, 25%, for me, it's like 25, 30, 40% in one day. In one day, I'm taking something off, whether there was news, whether there was the catalyst I was expecting, or whether it's just running for a random reason, whatever. If a stock is up that much in one day, I always take something off. And so at all times, I always have some good till canceled, extended hours, sell orders set roughly, 25% from where the stock is trading in case we get a pop like that. Just what I always like to do. Now, if it's because of the catalyst, because of the news, and it pops 25%, but I wanted more, I'm not going to be greedy on that. I'm going to let myself take profits there. And if it starts to fall back down, I cut the rest off, and I can always re-add and rebuy if I still like the play, back down toward support, back down toward where it was trading pre-spike. So a couple things I think you need to make sure you have in place, because what everyone got in the habit of doing, everyone got in the habit of buying and holding these things and expecting these things to make kind of sustained runs. Some of them do, some of them don't, right? So expecting a sustained run isn't necessarily, always going to be your best bet. A kind of like a build up in anticipation of an earnings report, news, catalyst, data. Those could be more sustained runs, but overall, right, we kind of see I think we're going to start seeing more pop and drops, more kind of pops and then slow fade backs, which could mean that maybe shorting isn't a terrible idea to start thinking about again. One of those stocks that we talked about weeks ago as a short idea, not Wish, it was Mark. It was MARK, and it's been a great one, right? So Mark has had its couple days where it popped a couple times. Here's this. I think I was talking about Mark as a short backup in here, back in the 180s, 170s area, 160s area. It's down and it hit the target. So it hit the first target that we had on that, which was the 50 period simple moving average. So it's hit the target. I'm not in that short right now. Could it certainly see more weight to the downside? Yes. This past week is what really pulled it down to that target. But Mark is one of those stocks that I said, hey, this has an S3 on file. They can do an offering. They're probably going to do an offering at some point. And now it's popping back down and hitting that support level potentially here at that 50 SMA. This could be a bounce point for Mark, but I'm not going to short it at this point. But if you have something that's trading well above that 50 SMA, with an S3 on file, and it's been one of those stocks that had a pop, kind of pulled back, and then you can look into shorting on those next couple spikes with a stop loss and setting your stop loss at a certain point so you're not going to kind of screw yourself. I play these at smaller size. It's been kind of fun, or at least somewhat fun to play. Another one as well is BIMI. It's on my list as a short potential play here. It's holding up, so I don't like that in terms of being short. But if it gets another pop and pops up over $1 again, that's something that starts to interest me as a potential short idea going forward. So if it holds up and it holds over $1, probably not, but maybe I'll leave a stop loss roughly at like 125. So if I was to get in short, looking to short this thing over $1 with a stop loss over 125, and I'm looking to ride this thing back down towards that 50 SMA, which is down towards about 75 cents. These types of plays start to become a little more, I want to say, profitable if we stop seeing the craziness of everything running, holding up, running, like we've been seeing the past like year and a half, right? So this could be more profitable going forward potentially. That said, DPW is a stock I want to mention as well. They have earnings, I believe. Is it tomorrow? They may have earnings tomorrow. I think tomorrow. Yeah, they have earnings tomorrow. So DPW, we can actually pull this up. Let's see if I can get something up here. Let's go to FinViz. FinViz also like blocked the ad block. It's like making you like not use the ad blocker anymore, which is kind of a pain. Let's see. Correcting and replacing their third quarter results. What is this? Let's see. Maybe they dropped their earnings already. I don't even know. But my concern with DPW's earnings, revenue of $44.6 million, increase of 176%. We got to go to BAM SEC to see if this is actually accurate here. I want to see the filings. My concern with them was that they had a lot of money, at least as of last. Yeah, they have the quarter 3 out here. Let's see. Let's go to cash. See how the cash standing is looking for DPW. They got $44 million in cash as of September 30th, 2021. That is compared to about $18 million as of December 31st, 2020. So there you go. It's interesting to see there. Do we have like let's look for revenues. I like to just do the kind of the what is this? The Command F feature on the keyboard. Revenue with an E, sorry. Revenues here for the third quarter, 3 months ending September 30th was $7.8 million, which is an increase of 5.7 this time last year. Revenues are up pretty big. So revenue of $7.8 million. Cryptocurrency mining revenue is tiny. Revenue, lending, and trading activities. Okay, so what I do want to pull up now, cost of revenue $5 million. I want to pull up comparing their earnings report for last quarter. We'll see how this one plays out this week, but I think they're supposed to, what is this? This came out on Friday at 1:16, or this came out on Sunday at 1:16 a.m. This just came out. Okay, cool. Let's see. They postponed their conference call they postponed the conference call to Monday. If we go back into, I believe, August, they had their second quarter results. It's always good to compare these types of things. So we had, let's see, 9-month revenue. I want to see their 3-month. 3-month revenue decreased. Revenue decreased. This is not going to be good. $36.5 million to a negative $30.8 million from positive revenue of 5.7 the prior fiscal quarter. Oh, here, because this is exactly my speculation. Revenue from lending and trading activities includes unrealized gains, losses due to volatility, blah, blah, blah. Okay. Can result in the company reporting negative revenue. For 3 months ending September 30th, the company reported negative revenue from lending and trading activities of $38.9 million, including a negative $33.4 million unrealized loss for the company's investment in ALZN. This is what I was very scared about. This is this is a disgusting earnings report. It looks so bad because we looked at this is going back because this is the last quarter report. Okay, so revenue of $62.1 million was quarter 2 2021, which was a crazy increase. It looked like wild. Why? Because revenue from lending and trading activities of $53.3 million due to the allocation of funds, blah, blah, blah. So essentially what they're doing is they've been trading stocks, right? So the DPW, they've been through the subsidiary, they've been trading penny stocks, which has been they've been getting crushed. The third quarter has been bad for penny stocks, right? So they've got a lot of money in ALZN. I was like looking at this. We did a video on this the past couple weeks, weeks ago. This CEO is buying these stocks, something like that, insider buys. ALZN. Look at this thing. I mean, they were holding this thing, and this IPO'd back up here, well over 10. And so they were in, that report came out, back in like June or July, right? So ALZN's up over $5. Now ALZN's down like 2. So that's why this is not going to look good. It's not. But they're going to, but again, unrealized losses is what they're going to probably highlight on. That's really not looking good. So I was worried about that. And we kind of now see, at least I'm seeing what I was worried, which is why I didn't really want to hold that. Also, I do want to touch on another stock that I was watching too, where I've been in, ELYS. Things have been kind of taking a while. This thing is kind of pulled back. I saw the earnings and I got out in the 4s. For now, that's really it. I played it. I would love to get back in if this thing comes down lower, but I saw the earnings report, wasn't like super impressed, and then I stepped myself out for a second. That's it, just for cash purposes, and I'll check back in with them. I like them. I think this will be a play that I'll come back to multiple times in the next couple of years. So we'll see. All right, sorry. And go back through some of the comments, and then I'm gonna wrap things up. I don't want to go too long, but hopefully we covered a couple good things. Hive, let's look at Hive. OTC got crushed too, right? Last week I was saying this has been good. This has been holding up really well. Look at this. Look at the volume so far in October, November. Really, really strong volume on Hive. This has been good. So this is probably one that I would say you want to be looking at, like, let's say like this range where it kind of dipped to on Thursday, 368. That's been kind of your pull. That pullback. Look at that. That pullback was eaten up very nicely on Thursday. Dipped down under 4, bought up, boom. Now it closed up the week over 4, which is good. This looks really nice. This looks like it could have a nice run to 5+ if it can kind of push up and hold up. Solid. Been putting in higher lows. It looks pretty good. Chart wise, until this starts breaking down under that 4 and holding below 4, getting back and making new lows, it's looking solid. Let's see. Metaverse plays here. I haven't been honestly paying too much attention to some of those plays. Let's see how Facebook's doing. Meta, right? Meta platforms now. It's been pushing. It's over the 50 SMA. This could be a good play, I guess, now playing FB, it's the ticker, but playing Meta, the company, right? This could be an interesting play for an options trade into the end of the year from, like, let's say this 339, 340 support level over the 50 SMA. For a move, maybe back up towards those highs, or at least making a shot up towards those highs. Could be an idea. I haven't been paying attention to too many of the small caps, though, which is somewhat of a, I guess, potentially it's not smart, but they just haven't been hot. So I'm not too interested in a lot of these sectors until things pick up, which we may start to see this week. So we'll see. Prague has been an interesting one that's been holding up for a while. Look at Prague. Every pullback seems to get bought up on Prague. I don't know. This is probably one, I haven't looked into the fundamentals here. This is probably one that has a lot of downside at some point, but we'll see. This thing has been holding up really, really strong. Right now, support like $4, pushing higher. 5 and 6 will be targets. This is one that I would not be interested in buying on green days, but buying on the red days where it's holding support with somewhat of an area of a stop loss in mind, I think it's not a terrible idea. Volume has been there. Again, this week it was strong. We're noticing that, at least I've been noticing that a lot of these stocks that have been making some runs over recent weeks are the ones everyone kind of flows back to. It's just kind of the nature of it right now. Everyone kind of flows back to the same old stocks because, they know that these can run and then they've been moving, that's it. And so everything else gets tossed away to the side and just kind of fades off and flushes out. It's been what we've been noticing. Will a trailing stop to catch a quick pop? It could be. I personally haven't been using too many trailing stops. What I'll use a trailing stop for is if something hits all of my price targets and then it's pushing up and I'm like, I don't know how to handle this now, kind of. I don't really know. So I'm not using a hard stop, but for example, BW. BW is a stock that it's been super strong for me and it was a nice winner. So I'm holding some options out to next month with a trailing stop. If this thing falls under 950, which roughly lines up with some of the highs that we had, and it's also been holding that level ever since it broke out, over 10. Under 950, I'll get out. That's kind of like my trailing stop. But if something goes, because this thing went, like, look, this thing went, I was like, okay, I'm targeting like $10. It'll be like kind of like my high-end price target, right? I took profits along the way. It hit 10. I'm like, okay, now what? So if you don't really know what to do, it hits all your targets to the upside or to the downside. That's where I've been putting a trailing stop. So for example, the 950 area is a trailing stop for me. But I don't like to use hard trailing stops. What I've done is I put an alert there. So I'll get notified on my phone if I'm, wherever I can be notified, and I can get out of my position if I need to. So that's how I've been doing it personally on trailing stops. NVOS, the idea behind this swing is quite literally for the type of move of 50 to 100%. I don't really think this is going to be like a small play. They have earnings coming out, I believe, fairly soon. You can see like I have a bunch of my orders already set just in case. This is what I like to do. For about, let's see, I got 3,100 shares for about, it's about 1,000, almost about 1,500. So almost half, roughly half on the way up. And then we'll see what happens. But this is one that, look, this thing uplisted to the market, I believe. I believe it was uplisted back earlier this year, which it was. And then in this thing, it's been slowly kind of just bleeding out. There's been some good news behind this one. Let's dive into FinViz and pull up some of the recent news. It's a tiny float, though. If you go into this thing, NVOS, so I've been kind of positioning myself in these super low floats down here under 2. Sure, it's a small float, sub 10 million float. Market cap is at 42 million right now. If we dive deeper, they have joint venture news with a telehealth platform. Okay, cool. That's great, but nothing super exciting that will get people, trading your stock up. This is interesting. This right here signs letters of intent to acquire 7 pharmacies in the United States. This is quite interesting because the pharmacies collectively generated approximately 55 million in annualized sales in 2020. It's not like a ton, right? But 55 million in annualized sales in 2020 for these pharmacies. Yeah, it's not profit, but what's the market cap on this thing? Market cap on this thing is 42.6 mil, right? So this is where it gets to be like, well, this could be very undervalued if we get an update on some of these numbers and things are looking good. So we'll see. That's kind of one thing that I'm watching, right? But that's kind of the idea. It's just I'm waiting patiently on this thing, letting it do its thing, and we'll see. I believe they should be announcing earnings some point in the next week or two. 2 weeks, 3 weeks? I forget. But that's coming soon at some point on NVOS. That's what I've been doing. I've been just playing that one there, or at least buying those dips for. MVIS, different stock here, has been bleeding out again with the small caps in a sense. It's been bleeding out. It bounced down. Where did it bounce out? It bounced at like just under $7. Maybe it's coming down under $7. That's where it might bounce again. We shall see. CEI ready for number one. CEI had some interesting news, I believe, Friday after hours, right? This thing popped up in the after hours. So it had a nice little pop, 150, 160, which would put us over. If we can hold over 150, that's a good sign. So 150 is a key level that we've getting rejected. We got rejected at last time we tried to pop. And so if we can hold over that level up towards 2, I think would be the next area to watch. So we'll see. This one could get run up on pre-market on Monday, tomorrow. But we'll see. Let's see. BBIG looking bad. Let's take a look. Yeah, BBIG is kind of just fading out, right? It did the full circle move, right? It had that crazy run, and now it's just like bleeding. And this thing can go a lot lower than you think. It really can. So I don't want people to get caught up in, bag holding these things. Here's the thing. There's a difference between I see it and everyone comes across and realizes and will end up trading differently, right? But the way that I see it is if I'm buying, for example, right? Like NVOS is a perfect example. Let's pull it up. NVO. Sorry, we just looked at it before. Right? This thing, okay, hasn't run, right? This thing was uplisted earlier this year and has been fading off, right? This thing is not like it's been overly kind of blown up to oblivion. Bag holding to me is not buying something that's already made a massive move off the recent lows or off the 52-week lows. So if this stock, for example, made a move of 100%, 200% off the 52-week lows, which right now are 151, then you're holding that thing, hoping for it to go higher because you think it's undervalued still, or you think that there's this or that, or there's some catalyst, and the thing keeps going down. It's going to probably go down a lot more than you think, right? BBIG is a perfect example of that, where I think there's a difference. You're back holding BBIG, I believe, unless you're going to be holding it long term, right? But if you're in it for a short term trade that became if you're in it for a day trade that became a swing trade that became a long term hold, that's a bag hold, right? Unless you're in it for the long term with that initial mindset. So this is an example of people are getting their bag holders, and the thing pops, right? Which it had a kind of a mercy pop for those who may be in from over 10. It had a mercy pop at 5 up towards about 9, and that was potentially your opportunity to get out because it's been crushed ever since. So there's a difference between bag holding a stock like this or bag holding a stock that's hitting new 52-week lows that's been bottomed out, that hasn't moved for months, that is undervalued in your eyes. There's a difference there. So you can kind of see this thing has been, obviously, it's had its days, it's had its run. Will it probably have runs again? I would not be surprised. It's still a valid play for our run, I would say, and potentially if small caps heat up, because it was one that ran before. So everyone knows they will always go back to the ones that ran before because they know that they can run again. So it's kind of that rinse and repeat type of idea, but it just takes months for a lot of that stuff. So let's see. BBY. Best Buy. Let's see. Decent past earnings, hourly on an uptrend. Daily looks nice. Could be a lotto into the earnings. Look at this. This has been super strong. Personally, though, I'm not a fan because with this type of move, because what I've noticed, right, is when you get this run up in anticipation of earnings potentially, it's been super strong, right? Now, could it go higher? Yes, it certainly could. But many times the earnings report, right, the run up pre-earnings, this is factoring in. It's already factoring in the earnings potentially. So you would need a banger earnings, killer earnings, for people to be like, wow, this beat on every level, it looks super strong, and it's going to go higher. If it comes in line or it doesn't beat on all kind of aspects, or it's like revenue or beat, but EPS didn't beat, then that's where you can kind of see some sharp pullback. So I'd be cautious there. It could be worth a lot of play if you really believe in those earnings. But personally, when you have a big run up in anticipation, this thing, guys, since October 1st, right, this thing is up 30%. It's a large cap. I'd be a little bit cautious there. Just personally, into the earnings, I don't necessarily like that. For example, let's say NVIDIA had earnings, right? But the day before earnings or the day of earnings, it actually pulled back from 304 down into the 280s. So it kind of had that earnings pull and then the earnings beat, right? If it keeps running into earnings, I'd be a little bit cautious of that. Now, this thing still had a run up into earnings, but just be aware of those types of potential. I would rather something that's pulling back into earnings. It minimizes your downside risk to a degree if you believe the earnings will be strong, or you're just playing a lotto play. I am currently 23. SPI had that little run and it's pulling back. If it can hold up into the mid to upper 5s, it could be interesting. This has been one that's run in the past. If you go back, let's look at the weekly chart. This ran a couple months back in October of last year. Had a crazy run. This thing ignited things from $1 up to 45. I mean, that's just insane. So it's one of those that has a history. It has a history for sure. Let's see if it can pull back and build higher lows. I would say want to see this thing holding over the 50 SMA, which would be, mid 5s probably, 525 plus. You don't want to see it dropping below that level ideally, although it's, got some good support, looks like, in the upper 4s as well. BBIG has earnings tomorrow. So yeah, I personally would stay away. PDSB. I know a lot of people have been holding this one longer term. Biotech holders have loved this one. I think I traded it last year, back when it was, lower in the 2s, 3s, maybe, I don't know, great time. But it's been holding up. It's coming down to a spot that I kind of like this area. Down in here, roughly has some good support, bouncing this level last time. So it looks like under 10, as much as you want to kind of see $10 hold, under 10 down towards the lower 9s could be a good area of support. Also lines up with the 200 period simple moving average, which is roughly 950 right now. So that could be a really good support bounce zone if you like PDSB. And this has been one that I haven't personally followed super close recently, but decently sharp pullback really in the past month and a half could be a potential opportunity right now for a dip buy. Clove I saw Clove hit those lows. This could be one that at some point, wow, Clove really got crushed, got destroyed. Down, it could be an opportunity down here. I could certainly see another squeeze. Only problem is that I've been noticing, I think I saw that we saw that retail trading volume now accounts for like less than 20% of currently like the volume in the stock market. So that number, I don't know exactly where it was. I want to go back and check it out, but that came out this past week. So we're noticing a lot of retail traders, it seems like, have kind of, the fad may be over, right, to some degree. Now, for many people, this changed their life. The past like year and a half may have changed their life, but for a lot of people, they made some money, lost some money, maybe lost more, and then they're like, yeah, I'm good. I'm just gonna, invest, buy and hold or whatever, and put my money in an index fund, do whatever. Not really worry too much, or buy and hold a couple key stocks, and that's it. Maybe play around with some lottery money, and that's it. So I don't know. We would really kind of need to see, I think, your bigger names. So let's take a look at the short squeeze sector in a sense. GME, look at GME, kind of slowly just kind of holding up. GME looks pretty interesting for an idea for a trade. If GME can hold up over $200 now, we could be looking at this thing, if it clears over 260, right, from where it's at right now. 260 is roughly, let's see, this recent high, about 12% higher. Over 260, we can maybe even see 300 plus on GME. I wouldn't be surprised. This goes for all-time highs since the end of the year into early. It ran in January. So this could be setting up again. Look, there's GME. Let's take a look at AMC. AMC setting up as well. I kind of like that AMC chart a little bit better, to be honest. Building those higher lows. AMC got some good support in the mid 30s. It's up over 40 right now. So I would not be opposed to like the Clove idea. If we see some of these short squeeze or plays or stocks running or going for new highs. You don't have to necessarily run. They could just go up and slowly kind of grind to new highs and then eventually kind of hit those highs and kind of have a 25-30% day and boom. That could ignite a lot of those past short squeeze Wall Street bet runners, which Clove is on that list. TKAT is an NFT kind of play, right? If it's that theme, this is one that has had a history of crazy runs. This thing is free float of 7. It's a low float stock. This is one that I wouldn't be opposed to maybe start picking something up under $5. Be careful on it though. Here's how I play it, right? You can play things a lot of different ways. And the problem I think a lot of people have is that they go in too heavy too fast. So if you got cash available, grab, let's say you look at your positions and you say, I add in thirds. I like to add in like fourths roughly. So I add like a quarter full position size. A full position size right now for me is like 15% of my account. I up that from 10 just because I've been noticing that the higher conviction trades are doing better than the lower conviction trades and the technicals aren't working as much. So I'd rather focus things into higher conviction plays, go heavier, not like crazy heavy, not going all the account in, but like going heavier on those plays and whatever. So I'll add, let's say my max position size roughly comes out to $5,000. I'll add, maybe like $1,500 or I'll add $1,000, whatever. And maybe that's something you can take for a TKT. Add that right here. And then I'll add another $1,000 if it hits $4. If it drops under 4, I'll add another 1,000. And you're kind of just slowly getting your average or playing the game to get your average in. And then this is one of those that has had history of runs. I wouldn't be surprised if this thing makes a pop and pops up to $7-8, right? Which doesn't chart wise, doesn't even look like that much right here, but that's 60%, right? So that's a pretty big move. So that's kind of how you can play some of these low floats. A lot of them, they always kind of run in a sense. Obviously being careful. When I say they always run, a lot of them will have their day. The ones that are the risk are the ones that have no cash, threat for offerings, threat for delistings and whatnot. Those are the scarier ones that I'd probably stay away from. But stuff that's been holding up, you watch the last couple earnings reports, they look decent. A lot of those low floats hitting new lows. What's happening? A lot of times we see the funds and even the insiders that are in these things from way higher averages. We have these crazy runs, and what do these runs allow? They allow them to get out. So if I'm in from TKAT and I'm an insider, for example, and I have an average at like $10, right? I don't know. I doubt that's even the case here, but let's say I have an average of $10. These things, whether you like it or not, they're probably going to get a good run. Maybe I average down. Maybe this thing runs $9-10. I can get out, break even, or make a few bucks on my average down, wash my hands and walk away. And so these things, they do get run. And a lot of times it's not up to kind of the retail traders to do that, right? It really comes down to volume when they're finally let loose. And that's kind of the nature of the game, right? To some degree. Okay. JMIA post ER. Let's see. This thing has been getting crushed. Jeez. Yeah, this thing is okay. Let's see if it holds up. Or like, I always look for a technical level, right? But I don't know. I haven't been following this stock, so I don't know how the future looks. But if it holds up in the 13s, it's trying to hold up right here around $14. If it hold up and it doesn't drop below the recent lows after the ER report, yeah, it could be a good opportunity to average down or to grab something right here. DDS looking weird. Let's see. Any thoughts on it? Dillard's. Holy jeez. What? I remember when I traded this thing. I don't know. I think I was trading it long or short. I forget when. Back earlier this year when it hit all-time highs. I think I traded it short from like a move from like the 150s down on a pullback on one of these red days. It was nice like for, a large, or I guess a higher price stock, right? For me to be able to trade short. Market cap is 7.5 billion. This thing is wild. Absolutely wild. Revenue for third quarter was 1.5 billion. I'd be interesting. Revenue for the second quarter was 1.6, 1.3, 1.6. I don't know. I think this, I haven't looked deeper into this thing. Let's go back to like pre-pandemic, right? 2019, what were your revenues looking like? Revenue was 1.42. So revenues are actually holding up decently. Pre-pandemic revenues, we're kind of in line with that pre-pandemic though. So at some point, this is probably one that I don't know. I don't want to like say like, oh yeah, just short this thing, but like this is probably something that I would say could be an opportunity. It looks really disgusting, or it looks very kind of nasty if you're a short going at this thing and saying, yeah, I shorting this thing that's kind of holding up all-time highs. Yes, I hear you. But again, what is the exact same thing we said on Mrna? I don't want to short this thing up here over 350, over 400. As much as we thought it was overvalued, I don't want to fight that because this thing can go higher. It always can go higher. And if we thought about that, even if you had an average under 400 on a short, you ended up a couple months later, that thing is down 50%, right? So this could be one that I say I wouldn't necessarily look at DDS. I wouldn't necessarily say options. I would think shares could be a better idea for a short. Something that I'd be looking at as a swing idea because it has range down. This thing could come back down to like 250, which is a 25%, 30% pushback, and then bounce from there or hold up there and build higher lows. But I don't know. This is an interesting stock. I think this is somewhat, I would want to look a little bit deeper into the fundamentals there, personally. Because what has changed in the past, let's say, year and a half, right? Post-pandemic, what's changed, right? The stock was, from 2016 on, was like just flatlining. What has changed to make this thing, super valuable? I don't know. I'm curious. I want to look a little bit deeper. Watching UPST to see where it comes down to. UPST is hilarious because we had that guy that went on CNBC and it was asked, what do they do? And he had no idea, which is, it's fine. It's part of the game, right? Part of the game. I think it's also lined up with earnings report, pulled back. Yeah, this thing may find something around like $200, if not upper 190s, upper 180s could be an area. Prior high up in here around like 192 could be a spot. So I'd be looking at something like that. GME had a really good day on Friday. I think that the GME's chart, AMC's chart looks really good too, to be honest, just for like a swing trade approach. If you want to look for a swing trade, chart looks like it's setting up. SOS. Now, SOS, this I think this is a potential opportunity. This is one that obviously needs to get run up with Bitcoin mining play, right? With Ethereum, they mine Ethereum, Bitcoin, I think. This needs to get run up with Bitcoin, so you're going to have to be paying attention to that. But with Bitcoin pulling back and small caps getting annihilated the past week, there may be something here, right? So I think SOS could be a potential just kind of relief bounce type of play at some point. And I'd be looking up towards $2 target, which $2 from where it's at right now is about 50%. So if you're bag holding SOS, yeah, it sucks. But if you're looking at it from a fresh point of view, this could be an opportunity, especially with Bitcoin pulling back. Everything's kind of going against it right now. Sentiment-wise, across the market, Bitcoin pulling back. I mean, if we get a pullback in the overall market too, boom. I mean, this thing could be down under $1 before you know it, right? But there'll probably be a relief bounce at some point. We're looking at a market cap. Market cap is still fairly high. I mean, I don't want to say fairly high. I don't know. I haven't paid attention to the recent earnings reports. But market cap is 300 million. So we'll see. Mrna. Personally, let's see how it shapes up. But I wouldn't want to play this thing for... I like to look at bigger picture. I like to look at swings. So if mRNA can come back, maybe comes down to like 250 or so, I'd be looking at like I ideally would like to play in the money or like roughly at the money options, but give yourself a couple months. This might have a nice move back up to over $300. I'm not saying 400 or 500. I'm not saying all-time highs, but I'm saying back up into like 300s. Could be where it maybe kind of finds its ground for a little bit, but it just bounced from the low twos to like the mid to upper twos in a couple of days, pulls back down towards 250 or maybe even lower. That's where maybe I'm looking at some options. I mean, like $250 strike price, roughly 250 strike option for a swing play. Give it 3 months, something like that. Maybe buy options out 3 months from now. And if we get the move in the next month or two, right, take profits. But if we, at least give yourself some time on that. So that's that. I'm going to wrap things up here because I want to look at futures really quick. How are futures doing before we wrap things up? Are we green or red? We are looking green. Look at that. Look at that. Green across the board. VIX is down. We got small caps looking for a little bounce. Small caps the most green, almost 0.5% green. So there you go. Tech up. Everything. Hey, we'll see if this holds up into tomorrow. We will see. We will certainly see. So I appreciate you guys for tuning in. DPW, be very careful. DPW had a nasty earnings report that was just dropped. It does not look good at all. Like not at all. Again, I'll read that really quick. Yeah, the chart was looking good, but I was kind of getting a little bit worried about it. But look, here it is. They dropped this. They have their report webcast on the 22nd. They postponed that, I think, by a week or so, or a couple of days. And it was generally, that doesn't necessarily mean it's bad, but people can always kind of guess and say, it's bad. Here we go. You dive through this. If you look at 9-month revenues, yeah, it looks like it's a good increase. Okay. But you scroll back down, 3-month revenues for this quarter, revenues decreased by $36.5 million to negative $30.8 million from a positive revenue of $5.7 million in the prior fiscal quarter. Oof. Be careful. It's because of trading activities. They've taken a lot of unrealized losses on their trading activities, which is why. And their cryptocurrency mining, which is part of their business, doesn't pull much. It does not pull much money. So net loss of 42 mil. This is going to be this is going to get destroyed tomorrow, I think. I don't know. I mean, we'll see, but maybe they can come back in the earnings call and help. But I don't think it's going to be looking good. I don't even know, like, where do you put that? Cash of 44 million. Okay, so what's the market cap on DPW? Let's look at this really quick before I wrap things up. Market cap on DPW is 140 million. This could take a pretty big hit to the market cap. I don't know. We'll see, but it's got resistance here at like 215-ish. I mean, who knows? And maybe they can pull something nice out of that and people can get behind it. I don't know, but I could see this thing hitting new lows. I wouldn't be surprised if this thing comes down under 173 tomorrow. We'll see what happens though. Just be careful of that. Earnings call tomorrow as well. So appreciate you guys tuning in. I am going to bounce, watch some football maybe and just relax. And that is it. So we'll see if this market holds up this week. I think it should be a better week than last. But again, there's some more pullbacks across the board. We shall see. But I appreciate you guys for tuning in like always. Make sure to hit the thumbs up button. Consider subscribing if you're new. Check out some recent videos. I have one video, I think the day in the life video. If I can pull it up. This video right here, day in the life, is actually doing pretty well. It's been, I think the algorithm is trying to pick it up. So we'll see. Check out that video recently on the channel. And I appreciate you guys for tuning in like always. And I will see you in the next one. Stay green this week. Well, we'll try. I mean, for me, right? Swings.